Welcome back to The Explainer. Today, we're diving right back into the GoldMining Swissie recovery series. This is episode 6, and we are tracking the account's progress through week 24 of 2026. Now look, if you're here for overnight riches or some hyped-up trading claims, you're definitely in the wrong place. But if you want a calm, analytical, and completely transparent look at the harsh reality of trading account recovery, well, let's just dive right into it. This dark, hyper-focused visual style we've got going on perfectly represents the unforgiving environment of this recovery. We're tracking a cent account strictly trading the US dollar against the Swiss franc. And despite our steady efforts week over week, the dashboard shows an account that is still just grinding its way out of a pretty significant deficit. This isn't about popping champagne over massive wins. It's about documenting survival, sheer discipline, and methodical progress. Now, the absolute crucial takeaway for week 24 is simply this. Recovery is a process. It's not an event. I want to be completely upfront with you. This was not some magical breakthrough week. There were no massive market swings that miraculously wiped out past losses. And honestly, that's exactly how real long-term recovery actually works. It's built on small, steady, unhyped gains that are executed without any emotion. It's kind of like watching a forest regrow after a massive fire, right? The daily progress is barely perceptible, but that compounding consistency is what ultimately restores the entire landscape. Putting these two metrics side by side really reveals the stark reality of our situation. For week 24, the account generated a positive weekly growth of 0.856%, which is great. Yet the total growth, that still sits at a painful negative 20.33%. The account is still significantly below break-even overall, and frankly, acknowledging this gap is absolutely fundamental. It keeps trader psychology in check and forces us to respect the immense amount of work we still have ahead of us. And to truly grasp the gravity of where we are, you have to look at the historical context. At its worst, this account suffered a historical maximum drawdown of 76.78%. Think about that. That is severe. It represents a terrifying moment when the equity was pushed to the absolute brink. It serves as a constant, sobering reminder of the immense risks involved in these markets and just how massive the ongoing effort has to be to pull that equity curve back into the green. Of course, trading doesn't happen in a vacuum. We had some major macroeconomic forces driving the market this week. Crucial US CPI inflation data hit the wires, and that immediately shifted Federal Reserve rate expectations and, naturally, Treasury yields. Add to that the persistent strength of the US dollar clashing directly with the safe haven demand for the Swiss franc. And all of this hinges on general market risk sentiment. Understanding these volatile crosscurrents is absolutely vital if you want to read USDCHF price action and actually find those narrow windows of opportunity. Taking a look at the 15-minute USDCHF chart amidst all those macro news drops and market volatility we just talked about, discipline really dictated an incredibly strict approach. In fact, only a single buy trade was executed this entire week. It was all about waiting for the absolute optimal setup, taking a highly calculated slice out of the market, and just getting out. Basically, a surgical strike in an otherwise chaotic environment. Zooming in on the micro-level reality of that one specific trade, the exact fractional math from the MetaTrader 5 report tells the whole story. We had a gross profit of 15.77 cents, plus a positive swap of 0.40 cents and 0 commissions. That lands the net profit for week 24 at exactly 16.17 cents. I know, it's small, but it is incredibly precise, and it is completely calculated. But you know what really stands out to me this week? It isn't just what happened. It's what didn't happen. Notice how incredibly flat and calm that red drawdown line is right now? That 0.856% gain was secured while maintaining a 0.00% weekly drawdown. Literally zero heat taken on the account. That right there is the very definition of a steady, disciplined hand navigating a tricky market. Now, zooming out reveals a much bigger picture. Contrast this quiet, frankly boring week that just passed against the chaotic lifetime performance chart. Those massive, volatile drops you see, those are what created the historical deficit in the first place. It's a stark reminder that sudden heavy losses are never recovered overnight. They are chipped away at slowly through dozens, maybe even hundreds of small, boring, consistent, positive weeks exactly like this one. Looking at the current weekly balance and equity progression, it confirms exactly where the account stands today. We're looking at a balance sitting at $1,904.70, with equity resting at $1,694.08.
Every single decimal point here is tracked, verified, and transparently reported to you. This is just the unvarnished truth of the account's current status.
So, where are we actually heading with all this? Well, the long-term objective remains completely unchanged. The road to 10,000 cents, or $100. I know, it might seem pretty distant given our current standing, but this week proves a really vital point. The active recovery process remains firmly in place. It's methodical, and most importantly, the needle is consistently moving in the right direction, step by painful step.
Every single phase of this journey will continue to be documented right here. The boring weeks, the highly challenging weeks, and the slow, steady climb back up. Total transparency regarding the risks, the drawdown history, and the ongoing challenges of this recovery. That is non-negotiable for us. No hype, just data, real accounts, real risk, real progression. But with a massive 76% maximum drawdowns still hanging over the history of this account, you have to wonder, can this methodical discipline actually hold up when the market inevitably turns chaotic again? I guess we'll find out in the next update.